offers a bit of a sense of the calm before the storm as we get ready for the very influential third quarter results reporting season in the USA, which will kick off in earnest on the 12th of October with megabank JP Morgan's figures. But from a macroeconomic perspective, we've still got the latest monthly UK manufacturing and industrial output figures on Tuesday the 10th, and inflation numbers from America on Friday the 13th. Now, US inflation reached 1.9% in August, still below the Federal Reserve's 2% target, although the central bank has pushed through 4 interest rate rises so far this cycle, all the same, as we can see here. If inflation creeps higher, maybe the Fed will accelerate its gradual pace of policy tightening, although the opposite may apply as well. Company-wise, possible headline makers include first quarter results from Sky on Monday the 9th. As the Fox takeover saga drags on, attention will switch back to customer additions, churn rates and average revenue per user, or ARPU, in the UK, Germany and Italy. We've also got trading statements from FTSE 100 firms Mondi and Hargreaves Lansdown on the 11th, and first half results from Tesco's £3.7 billion merger target Booker on Thursday the 12th. But for me, the most likely sources of a fuss in the week ahead are the trading statements due from a pair of recruitment agencies who are FTSE 250 members, namely PageGroup and Hays. PageGroup will give a third quarter update on Wednesday the 11th, and Hays a first quarter comment on Thursday the 12th. As we can see from this second graphic, Hays shares are continuing to advance smartly, whereas those in Page appear to have got stuck around the 500p mark. They are interesting companies in their own right, but also for the insight they give into the economies where they operate. If recruiters are doing well, when they'd expect that to be a good sign, and also vice versa. The firms do have different mixes of business, both in terms of geography and client industry, so investors must be careful not to extrapolate too much from one to the other. Page has a presence in the US and Latin America, for example, while Hays has a much greater slant towards the public sector here in the UK. When it comes to both sets of figures, there are 3 things to watch. First, like-for-like fee growth. After a nice acceleration, the last quarter showed a slight slowdown for both Page and Hays. Second, fee growth in the UK in particular. It'll be interesting to see if the Brexit talks, the Bank of England's hints about interest rate hikes and a bit of a rally in the pound have influenced British firms' hiring plans. As we can see, both Page and Hays saw a fresh slowdown in fee activity in the UK between April and June. Finally, check out the mix between growth in permanent and temporary posts. When companies are more confident about the outlook, they look to hire permanent staff. When they're a little bit unsure, they may lean more towards temporary hires. The bars show permanent growth and the line temporary placement fee growth at Page in this particular graphic. And this final chart shows the same trends at Hays, with the bar again showing permanent growth and the line the trend in temporary placement fees. Both firms returned cash to shareholders via special dividends at their last set of figures, so do keep an eye out for any comment on their future policies here as well. Thank you for watching, and I look forward to seeing you next time.